So, is the stock market actually a bubble right now? Now, this is a big question which everyone is trying to understand. There are a lot of speculations on the media that the market is going to crash soon, and there will be a lot of correction which will be coming up. So, in this video, we are going to understand what are the reasons behind people expecting a market crash, and also, in case of a market crash, what should you be doing? Now, with the entire 2020 situation, people were actually losing jobs, yet the stock market kept on going high. The developing countries like India, for example, the Nifty is at all-time high. They've actually crossed 17,000 points. In case of the developed market, like the US market, the S&P 500 is actually at 4,400 points, double of what it was actually at the crash. So definitely the market has kept on going up. But at the same time, we actually see the unemployment rate has also gone up. Just last month in India itself, the unemployment rate is actually at 8.3%. So the big question is, are we currently in a bubble? Can we expect a market crash to come soon? Or do you think there will be a correction? Do comment below in terms of what do you think? Do you think there will be a market crash? Or you think the stock price will continue to keep going up? Now, a bubble in a very simple terms basically means that any particular asset or something which is an item or can be a real estate or can be a sector starts getting highly overvalued. So in case of a bubble, what exactly happens is that because of the demand, the prices start going up really high, right? And eventually when the bubble pops, that's when there will be a huge sell-off, because of which there will be a huge decline in the prices. So that's what a bubble generally is. Now, two common bubbles that we all know of is the first one is the 2000 bubble, which is the internet bubble, where a lot of internet companies start getting highly overvalued, because of which people are starting to put their money into it, and eventually that led to a burst. And the second bubble, which we all know, is the 2008 bubble, which is the recession bubble, where banks are giving loans to people with poor credit history, because of which the people were not able to pay the loan back to the bank, and that led to a huge bubble formation as well, and eventually led to a recession. So these are the two bubbles that are commonly known to all of us. So in this video, we'll try to understand what are the possible reasons why people think that today's date there is a bubble formation, and can we expect a market crash or not. Now, the very first reason is actually because of printing money. Now, last year, the entire global situation happened. Governments across the globe started printing money. Now, definitely, this did help a lot of people. No denial on that. But at the same time, you will be quite surprised to know that 40% of the overall US dollars that actually exist today has been printed over the last 1 year. Even in India, the entire money circulation actually grew by 13%. Now, this is a very high number. Now, when you keep printing money, that leads to inflation, because at the end, money loses its value. Let me give a very simple example. Let's say you and me, we both have 500 rupees. Now, currently, 1 kg of banana, let's say, costs roughly about 100 rupees. Now, the government actually gives both of us about 5,000 rupees for free. Now, do you think once we get this free money from the government, the price of banana will still remain as 100 rupees? Definitely not. When the entire money is kept on getting printed, the asset value also increases. This is what we call as asset price inflation. So what used to be the price of banana before printing money will not be same as after when you print an excess amount of money, because money loses its value. And the same is applicable in case of real estate, in case of stock market or any other asset. And this entire term or this entire inflation is what we know as asset price inflation. Now, another main reason is because of the low interest rates. Now, government has already indicated that it's going to continue slashing the interest rate for quite some time. Now, because of this, your traditional investments like your fixed deposit or bonds have not become like appealing or interesting anymore, purely because, for example, fixed deposit in India is giving a current return of just 5%. A 5% is actually nothing, because your 2 to 3% is actually inflation year on year. After that, you even have capital gain tax. So the 5% interest is actually nothing. Couple of years ago, at least used to get about 7 to 8% interest. So naturally, people started moving away from fixed deposit into slightly something more riskier, which is giving a better interest or better return. And stock market was one of those options. So number of people who are entering the stock market right now has increased drastically, due to which the demand for stocks have gone up. Now, because there are limited number of stocks in the stock market, when the demand goes up, the price of the stock market starts going up as well. The price of each stock starts going up. And because of this, the market value or the market cap of each company also started going up. Market cap is simply the value of all the shares of the company multiplied by the value of each share. So because of the entire demand of the stock market going up, the market cap or the market value of each company also start going up. So these are two main reasons why people actually think that we are currently in a bubble and we can expect a market crash to be coming up soon. For example, just in 2020, the amount of demat accounts that have actually opened up are immensely high. Now, the big question is, in case of a market crash, what can we do? Now, none of us can actually predict when the market crash can happen. It can happen tomorrow, it can happen maybe 1 month down the line, or it may even happen in 2022 or 2023. None of us can actually predict when market crash is going to happen. But what we can do is that we can actually take a couple of precautions, a couple of steps. And these steps are not recommended by me. These are the steps which are recommended by top investors. The very step that you need to do is that make sure you have sufficient amount of funds allocated in your emergency fund. Last year, for example, in 2020, we saw a lot of people losing jobs and they actually did not have any means of living. So if you have a certain amount of funds allocated, which will maintain your current form of living for at least next 6 months, in that case, you do not have to worry if there is a recession because that will not impact you. So make sure that you have a sufficient amount of funds allocated in your emergency fund. Second step which you need to do is dollar cost averaging. So you need to make sure that you are consistently investing in the market, irrespective whether the market is going up or whether the market is going down. And you're consistently investing into top companies which have strong fundamentals, purely because in the long run, you will still be able to make profit because your buying power or your buying cost is continuously getting averaged. And the third step which we all can do is that we can be prepared for the opportunity. We all know a market crash actually offers opportunity. We have seen that in 2000, we have seen that in 2008, even in 2020's crash, we actually saw after the crash, the stock market started going up, right? So every crash has actually offered a huge amount of opportunity. Now, none of us know when a crash can happen. But at the same time, if we are prepared for the crash, if we have certain amount of liquid funds available, which we can invest during the crash, in that case, definitely we are able to utilize the crash to our advantage. So these are three main steps which you need to take in order to prepare yourself for a recession. So I hope you have actually understood why people are speculating that there's a huge market crash coming up, or why people are saying that we are currently in a bubble right now. So if you found this particular video useful, do like it, do subscribe, and I'll see you all in the next video.